Hi friends, today we are going to discuss about elasticity of demand. So we will look at some formula, so don't worry, I will explain you very easily. So what is this elasticity of demand? So the elasticity of demand equal to change in the quantity demanded divided by change in the price. So let us take an example to understand this. For example, if the oil price increased by 10% and demand is decreased by 5%. So now what happens to the elasticity of demand is percentage change in the demand is 5% divided by percentage change in the price is 10%. It should be with the minus. So the value will be 0.5. So it is minus, but always in absolute terms if you take, it is 0.5. So this is the elasticity of the demand. So now let us look at three parameters here. So one is elastic demand, and second is inelastic demand, and third is unit elastic demand. So let us understand what is this elastic demand. So we'll take an example and see this. So this is the demand curve. This is price and this is quantity demanded and this is the demand curve. So now you take an example of insulin. So what happens, let's say the insulin price is around 50 rupees and the quantity demand is, let's say, 30. Now if the insulin price is increased to, let's say, 70 rupees, do you think the quantity will reduce? It will not, because you do not have any substitute for insulin. So the demand will still remain at 30. So even after increasing the price. The reason is because there is no substitute. So when there is no substitute, the demand is not impacting too much. Maybe it will reduce to little bit. Otherwise it doesn't reduce in this particular case, because you will die if you don't take insulin. So in this case, this is called inelastic demand. So why you are calling inelastic demand? Because there is no much substitutes available in the market. Okay, and always when you calculate the percentage elasticity of demand, for inelastic the value will be less than 1. So now let us look at elastic demand. Take an example of Nescafe coffee. So if you take Nescafe coffee, let's say the price increased to same 70 rupees, then what happens to the demand? In earlier case the demand was constant, there is no change, because insulin there is no substitute. But now for the coffee, Nescafe coffee, you have lot of other substitutes available in the market where you can go and buy some other brand. So what happens to the demand for Nescafe now? Since you have alternate solution, people will go and buy alternates rather than buying Nescafe coffee because the prices increase too much. So the demand may reduce drastically low. So very few customers will buy the Nescafe coffee at this price. Maybe the quantity is only 5. So there is a too much of change in the demand here because you have lot of substitutes available in the market. So this is called elastic demand. So for elastic demand, the value will be always greater than 1. So now what is unit elastic demand? So when both change in the quantity demanded is equal to change in the percentage of price is called unit elastic. So friends, this is about elasticity of demand. Thanks for watching. Like, share and subscribe, and press bell icon if you want to watch my latest videos. Thank you.